So we don't advocate trying to time the market, whether it's opportunistically or through momentum. We advocate that it's time in the market, not timing of the market, that adds real and long-term value for you and your portfolios. David here from Swan Capital Europe on another lovely day in South Holland. We've been doing a number of webinars over recent weeks for the international community, covering the up-to-date market information, what's happening, the direct and indirect impacts of coronavirus on your investments and long-term planning, what you can do to protect your investments, and the opportunities that will emerge over the medium and long term. Through this, we've been discussing the nature of the momentum investor and the investor bias that goes with that. When we buy goods in a store, we're quite happy to buy things on sale when they're cheap and sell them indeed when they're at a higher price. But when it comes to investing, the investor bias tends to make us operate in the opposite direction. In this format, an investor will look at a market, whether that's a stock market, an individual share, a fund or an index or the broader economy, and wait till the prices start to move up and the value increases. They'll look at it and think it looks quite interesting. As it increases in price, think they should be investing. And then when it's right at the top of the market, think this is hot, I better buy in now. What they've done is bought at the latest part of the market with the validation of the momentum, but possibly too late into the cycle. As markets go through cycles, we know that as they rise, they will inevitably fall. And as they fall, they will eventually rise again. And as the markets start to fall, that investor will then go through that resignation of saying they'll hold on to that investor and maintain it over time through the desperation of willing it to get better until they get to that point of exasperation and saying, I can't take this anymore, I need to sell out. What they've done is bought it at a high, sold it at a low, and locked in a loss on their investment, the opposite of what they're trying to achieve. So we don't advocate trying to time the market, whether it's opportunistically or through momentum. We advocate that it's time in the market, not timing of the market, that adds real and long-term value for you and your portfolios. This is really relevant and timely as we're seeing market volatility right now and markets falling. We know that when people say it's different this time, it's going to go on this way forever, that it's not. And it may be closer to a point in change, and that what you should really be doing is looking at it in the context of your goals. So whether you should be making changes or investment changes right now depends on your circumstances. You need to align your goals, your risk profile, and your time frame with your investment to see that it's aligned. Maybe you just need to rebalance. Maybe you need to make bigger decisions. But that is dependent on your situation specifically. If you'd like more information on your investments, on your portfolios, on whether you're on track for your goals and what you should be doing about the current market movements, feel free to contact us. You can contact us at our email address, info@blackswancapital.eu, or go to our website, www.blackswancapital.eu, where you'll find a lot of information, articles and videos that can help you make some decisions and lead us toward us. You can also subscribe to this video channel and like and subscribe this video, and don't forget to click the bell so you can get updates as we produce more videos providing you more information about market movements and what's happening in relation to your long-term investment planning as an international in Europe. Thank you and stay safe.